Everybody, and thank you very much to the tremendous panel we have here today to discuss the rise of corporate activity and long-term trends. We have with us Mike Zrust of Lestari Capital. We have Michele Zollinger, who's the Global Sustainability Sourcing Director for Pulp and Paper at Nestle. We have Jeff Cole, who is oversees sustainability for Shell. We have Stephen Donofrio from Forest Trends, and just a warm welcome to our panel. As I've said, the topic is the rise of corporate activity and long-term trends. And of course, we've just come out of COP discussions where there is a spotlight on climate, a spotlight on nature. There's a lot of talk. As we all know, in the end, the numbers do the biggest talking. So I'd like to start by asking each of the panelists to introduce yourself for a couple of minutes, set out your long-term strategies, and to share with us the percentage of your total spend that is actually going into nature and how that reconciles with the other part of your spend. And I will ask Jeff, if you'd like to kick us off.
I'm sorry, you broke up there. Did you call on me?
Yes, Jeff, if you'd like to share, if you'd like to start.
Sure, thanks. So my name is Jeff Cole. I'm not actually involved with Shell's sustainability efforts generally. I'm the general manager for nature-based solutions just within North America. Joined the company in June of this year. And I'm sorry, Gina, do you want to hear kind of the overview of the program right now as well? Is that the?
Yeah, if you give us a couple of minutes and you'll answer the question, we'll move to the next panelist.
Yeah, certainly. So, few things. The reason Shell is investing in nature-based solutions and has been a participant in this market going back a decade is to support its net zero ambitions. So by 2050, the company aims and has stated goals of becoming a net zero energy company, which for Shell means not just carbon neutrality in all of its own operations, but as well as in all the fuels that we sell and deliver. So by 2050, every remaining fossil fuel unit that's sold is going to be associated with and packaged with a corresponding compensation in the form of an offset from nature-based solutions or carbon capture and sequestration. And so with regards to your question, what percentage of total spend does NBS represent? I personally, honestly, do not know. There are folks who could break that down for you. But the key thing is NBS is one of a lot of tools that Shell is pursuing and not the largest piece by far. So in parallel, Shell is investing heavily in renewables, in hydrogen, in vehicle electrification, in other low carbon energy technologies, so that over time, the percentage of fossil fuels in the product and portfolio mix is going down. The company believes its total emissions from all those sources, scope 1, 2, or 3, peaked in 2018 and is coming down year on year. And so what we're doing specifically within NBS have a goal of generating and retiring over 120 million tons per annum of carbon offsets by 2030. That's basically the size of the current carbon market. So to get there, need to make smart investments today that can help the market grow by an order of magnitude by 2030, and need to do that in a rational way that works for Shell's customers, and is, basically in tune with the overall NBS market, but that is being done in a really credible way. And so at the end of the day, NBS carbon offsets generally are still a contentious topic. and they need to be implemented in ways which are delivering true carbon benefits as well as co-benefits to communities and environments and all the places that they're happening. And Shell's invested heavily in boosting those practices and ensuring that they're embedded.
So let me ask you then, Jeff, for the second part of the question, because where there's irreparable damage being done in the meantime, by the time you get to 2030, actually there is damage done that cannot be restored. So the argument around compensation is stop now rather than to damage and try and repair later. I mean, a good example is the wild coast in South Africa. Which is causing devastation. How do you answer to your investors who are looking now, because we can talk about green technology, nevertheless, it is an extractive business that some will argue there is no future business model. So how do you respond to your investors?
Yeah, I'm not familiar with that example that you just cited there. In general, the company is moving towards net zero in step with society, and really at the forefront of the industry's efforts to get there.
Okay, maybe I can move to Stephen. Perhaps you'd like to introduce yourself and answer those questions, and any reflections you have back to Jeff.
Sure. Great to be here this morning, evening, afternoon, nighttime, whatever it might be for everybody. I'm Stephen Donofrio. I'm the director of Ecosystem Marketplace and Supply Chain Initiatives at Forest Trends. We're a nonprofit based in Washington, D.C. So I don't have the ability to answer those questions because we don't have the same type of approach on this as corporates do that are on this panel. But what we do is a bit to kind of be there as a part of the markets for commodities or for deforestation mitigation by providing data services and market intelligence to inform different stakeholders and their decision making. So just in the two parts of this, and I'll be fairly brief, Ecosystem Marketplace has been around for close to 2 decades now. We've been tracking the voluntary carbon market and compliance markets for all project types, not just nature-based solutions projects, but transportation, household devices like cook stoves and others. We are now seeing this market balloon to the point where it is now surpassed a record year volume of $1 billion. So 2021 already, even before the end of the year, is now exceeded $1 billion for the first time ever in a given calendar year. This comes with it a whole lot of opportunity, as well as a whole lot more criticism and skepticism about some of the projects, but also on the other side of that equation are the corporates that are buying these projects. We need to make sure there's credibility and integrity on both sides of this seesaw so that they really play nice together, and they also don't dilute each other's credibility and integrity. If one side of the corporate side or the project side aren't high quality, they might confuse and conflate each other. But the reality here is the voluntary market is about 300 million tons. So this is 2021 traded tons. That's about the size of Spain's total greenhouse gas emissions for a given year, 5% of the United States annual emissions. So it's still a very small piece of the climate solution puzzle. It's not meant to be the end goal. It's meant to be a part of the goal. We're not talking about business as usual. We're talking about business change. But we need to understand, just as we heard from Shell, that these are long-term trajectories, and we need to find solutions for the near term. Before I move on, I'll just say that these prices range from less than $1 per ton to over $100 per ton. A lot of those variances in prices are driven by those co-benefits, such as safeguarding indigenous and local communities, protecting biodiversity, working on and conserving water and other ecosystem services within these projects. Then on the other side of this is our supply chain initiative, which tracks the drivers of deforestation largely through corporates, but in agricultural supply chains. And so that's palm oil, pulp and timber, cattle, soy, cocoa. And the supply chain initiative we started about 8 years ago. And just briefly to say that what we're doing very in kind of what we're calling supply chain 2.0 is taking a look at all of these commitments more comprehensively. So if we're dealing with companies that have risk exposure to these different commodities, how many of them are also, implementing climate goals, and then from there, where do offsets fit in as a viable market opportunity? And we're seeing exactly to the point that we hear all the time, that companies need to address their challenges first before moving to offsets. Because just the high level stat, and I'll leave you with this, is that we just completed research for about 150 of the largest and most influential companies dealing with those 5 commodity groups that I mentioned. And of those, roughly about 120 had a deforestation commitment. About 97 or so had a climate greenhouse gas reduction target. Now, going further down, about 37 of those companies had a net zero goal. So right there alone, if companies are dealing with deforestation at that scale, about 87% of those 150 companies have a deforestation goal, but only 37 of these companies have a net zero target. We need to find a way to bring these worlds together. But then even further down the line, it's only about 22 of these companies are talking about purchasing offsets. So there's a lot to unpack with this, but going back just to conclude here is that what we're trying to do is provide the information that's needed to create price transparency, to create transparency about investment flows and corporate actions, to hopefully inform and provide information and guidance to other companies and stakeholders as we tackle these massive challenges.
Thank you very much, Stephen. And I think there is a big challenge and a lot to unpack around both offset. What exactly makes a justified and good offset that is in balance and resonance with good business, and also pricing. So maybe we can come back to that later. I think that's a good bridge perhaps to yourself, Michele, because I know you have, if you talk both in terms of forestry and also how that relates as a part of your broader net zero targets. And then, as I say, if you're happy to answer the question around the percentage of investment in total spend and how you balance that.
Yeah, sure. So my name is Michele Zollinger. I'm the Global Sustainable Sourcing Lead for Pulp and Paper, but have also a pretty big role for the climate angle. So working on our global reforestation program within Nestle and on our forest positive strategy. So I want to take the angle of the ag and food sector, because that's where obviously Nestle sits within this conversation. And I appreciate, Gina, that you're kind of brought it back initially from COP. I think that's probably still pretty fresh in all of our minds, this need and kind of where we actually need to go. So as you already mentioned, Nestle has set net zero targets by 2050. And this part of like nature-based solutions is a really critical part to actually allow us to get there. I think what I want to stress is that this is really a hands-on deck moment for everyone right now. And I think that, really for us to reach our target for 1.5 degrees, we need to invest in restoration and conservation at scale and at a pretty urgently, like right now. And the other thing that at least we also are aware of, that we need to do that at the landscape level. So how we do that really as a company is to ensure that kind of maximum impact from the ag and food space. For us at Nestle, but also I guess for other companies in that space, we need to kind of incentivize this type of investment really directly within our supply chain or within those sourcing regions, which we usually refer to as this insetting concept. Versus, balancing out the GHG emissions that are happening outside, maybe at a different location, that are not really connected to our supply chain. And I think, the ag and food or any generally land sector companies have a really unique position to play here, because we are already invested in those sourcing areas where we really get our ingredients from. We have a very vested interest to ensure that they keep being resilient and productive. And we also have the ability to really set up those safeguards. So for me, I think it's not really kind of a question how we do that or why we need to do it. I think what a lot of businesses are asking is, how can we actually create the business case for this direct investment at the level that we need? And this also means that we need to invest, think about new mechanisms that allow us to share those costs, to do that investment collectively in those regions. And so that's kind of, I think, where we need to go. So, you know, Nestle with the reforestation program, we've committed to planting 200 million trees by 2030, which is part of kind of the restoration of different landscapes, different tools within that. So it's a big part of it, but we, you know, I think we need to bring others on board and ensure that companies have the right incentives set up and in place, that we can really do that collectively to transform the food system and lead to where we need to get to as the world.
Thank you, Michelle. Yeah, great. And but the big question is that 2050 is a long way away, and it's the same question as put to Jeff. In the meantime, there is irreparable damage taking place, and yes, there needs to be. You're absolutely right. It's about finding the flows. You know, us here together in this room actually are serious change makers and can create system change by making really brave decisions. So I'm really curious, what is stopping? Because on the one hand, there's this compensation mentality is not what's going to save us. And you're absolutely right. In the end, it's about the target of 1.5 rather than what happens in 2050, because then potentially actually it's too late. So I'm curious, perhaps we can come back to that and maybe transition first to Mike to give you a chance to share, because of course you're also making investment decisions, how you reconcile this. So if you can share a bit about yourself and what you're doing, and any points you'd like to pick up that Stephen, Michelle and Jeff have made also. Mike, over to you.
Thank you, Gina, and hello to everybody. My name is Michael Zrust. I'm one of the co-founders of Lestari Capital and an executive director focused on sustainable commodities for Lestari Capital. We're a little bit of a different beast, I think, than what the name might suggest, I think, to everybody. I would kind of define us as an innovative finance enterprise. We came together about 6 years ago now, really to deal with one fundamental issue, which is that, you know, to date, conservation has been in this kind of realm of charitable donations, in the realm of CSR. Whether it's conservation or restoration, it's always been a little bit of an afterthought, sustainability budgets, CSR budgets, and so on and so forth. And what we were trying to do is we were trying to find ways of actually integrating and developing new models whereby conservation support was integrated into business. And the way that we do that is by identifying, structuring, and then managing demand for conservation, whether it's conservation, restoration. Lots of it's kind of an access to a diverse set of environmental service outcomes, so focused on climate benefits, focused on livelihood benefits, and focused on biodiversity benefits. And so we a very good example of this is our kind of latest program of work, which is called the Rimba Collective. It works with 5 founding partners, 4 consumer goods manufacturers, global companies, and 1 processor and trader in the palm oil supply chain. And we're looking at creation of a portfolio of 500,000 hectares of conservation area in Southeast Asia as a start. So it's ambitious and scalable, but the support of these projects is to be there for 25 years. And so what we're doing is that, you know, we've moved away, I think, and just kind of picking up on some of the points that the others have raised. You know, to date, I think the agro industry has made leaps and bounds in terms of making commitments to responsible sourcing, right? And deforestation avoidance in the supply chain. But I think there is a recognition, you sort of mentioned it a little bit, you know, by looking at the pledges, both made at the COP and in science-based target initiatives and so on, that we need to go beyond that, right? And how do we go beyond that? And you know, one of the issues, I think, is that if you look at the scale of that potential demand for conservation and restoration that is there, the problem is that there are no mechanisms currently in place, really, that would be able to do that efficiently, verifiably, transparently, and at scale. And that's what we're doing. That's why we're working with these companies to develop that, co-develop that, and we will be launching that early in next year. So I mean, I think you know, one of the reasons, just sort of coming back to some of your points, you know, what are the barriers to that? Well, I think what we're finding is, you know, that the demand is actually there, right? The demand for conservation and the demand for conservation at scale is really there. And we need to find that the way to capture that effectively, but also support the corporates that are making these commitments in making those commitments a reality on the ground with impact on the ground, where the claims that they are then able to make have been demonstrated and verified on the ground, that they have actually happened. And that's what the claim should be based on, not in terms of we've made a pledge, but well, what has that pledge actually resulted in? And you know, as we're progressing, what we're finding is that the demand for these kind of good, robust projects is whether they're focused on biodiversity or community livelihoods or climate benefits, is actually there. The interesting part is, well, where do we get the project supply? And the project supply now seems to be in the bottleneck. And that's a good problem to have, but it's still an issue. And there are many ways that with this demand that we can kind of innovate into scaling up portfolios of projects that are out there, into creating real incentives for alternative ways of developing, because the money is there and the demand is there.
Can I come back to, so this concept of going beyond, which of course, I mean, who's not going to sign up to going beyond? It's great talk. It sounds beautiful. We all want to go beyond, because then we've got a hope of business being a real force for good. And actually, when business does the right thing, in the end, it's actually better for business. And that's becoming very clear. So my question then is, when we talk about projects, looking for projects for capital to flow into, what's the starting point? Because isn't there a more fundamental question to be asked, which is, what is the initial intention within the business in and of itself, in what it puts as its priority? That rather than seeking for projects over there to compensate or to, you know, to somehow, it's still siloing and separating business and project. And as you say, we've moved, I think it's a very important shift that has happened, is moving from the kind of non-profit, philanthropic, charitable perspective on conservation, environment, social justice, to actually being human-centric. It's what makes us all human, and is actually what how business must operate. So can you share with us how in your investment decisions you bring that into play, and encouraging companies to start with intention and their own direction first before you move to compensation and going beyond with projects?
Yeah, I think you know, that's a really interesting question. I could probably talk about that for a lot longer than we have time.
I won't let you, because I'd like to hear from the other panelists too.
I know. I think, you know, the way that we approach it is by developing portfolios of projects, not just single projects where it's one company, one project, because unfortunately there is still changes. You know, the commitments also ebb and flow in terms of what fulfills certain requirements this month and that next month and next year. And we can't really do that. The projects need to have a safe basis on which to then make their own decisions in terms of how they manage, because they need that finance over the long term to build that permanence into those projects. And so a really good way of doing it, at least we found, is to actually create portfolios of projects, and we pool the outcomes that are generated by those projects, and those contributing to that portfolio then have essentially a percentage according to their contributions on all of the outcomes. And what that allows us to do is focus on projects which are inside the supply bases, for example, for the agro-industry companies that are participating, but it also allows us to focus on projects which might be outside, right? And you know, the claims might be slightly different resulting from that. You know, they might not be aligned with insetting, for example, but those projects are still fundamental in terms of making an impact on conservation, because we do want to still focus on actually protecting intact forest landscapes, because they might not be intact forest landscapes for that long if we don't focus on them proactively. And so actually creating that portfolio of projects you know, allows us to kind of get a broader scope of projects and outcomes that are being supported by the corporates that work with us.
Okay, well, let's move to a corporate then. Michele, let's stress test what Mike has just said. I'll let you respond to what he said, and then I'd like to ask a question.
Yeah, sure. I mean, Nestle is involved in the Rimba Collective as well to explore exactly this topic and how we can kind of share cost benefits, how we actually do this kind of collective investment. I think I would even want to quote Mike, you were saying kind of, we need to rethink the conservation finance paradigm. And for a company like Nestle, this means how do we really integrate this within our business? And how we do that is by connecting it really to the sourcing of our ingredients. So how, where are we sourcing from, and getting invested in those communities and making that really kind of the core part of our engagement and these type of restoration efforts. I think what I would like to stress here that is really critical is kind of the enabling environment for corporates, because if we just think about the incentives that then let us need to just focus on our own supply chain, just do these projects within one farm instead of understanding that they're actually part of a larger landscape, then we're not going to allow kind of this investment to flow to the activities that create the biggest change that we actually need, and rather kind of limit it and not be able to reach our targets. So it's really critical, I think, or one of the challenges I see businesses have is that the right incentives are set up to encourage those type of investments within our supply chain, so within the sourcing regions, but also that we are sure that we can count those investments towards our targets, because otherwise that creates a lot of uncertainty.
Let me ask you then, sorry, on the targets, how are you, what does it take for Nestle to put nature first, or how are you setting those targets? What is the primary goal? It's still profit, it's profit volume, or how is that? Because we're talking about long-term trends here, and we're talking about kind of the rise of the future of corporate activity. So and we're talking about a moment in time where there is a bit of a seismic shift. So can you share with us what steps, or what does it take for Nestle to be able to take steps to actually shift that first decision making? What is the decision tree? What is the end game? Is it profit? Yeah. Is it nutritious food to consumers? Is it about protecting the environment and through that delivering products to consumers? What's the future?
I mean, I guess the health of the company completely depends on the health of the land, right? So we won't be able to succeed if the land that we're sourcing our commodities from isn't healthy. So we have a very strong connection to ensuring that we can contribute and ensure that that's part of our regeneration of our commitment. So I think the driving factor for us is the science-based target that we set, our kind of climate roadmap, where we've measured and kind of outlined what does this even mean for a company like us. Most of our footprint, probably about 70%, comes from our ingredients. And those are aspects like deforestation, land use change aspects, other, how farmers are actually working the land. So the different actions that we kind of broke down from the target then within our roadmap are about, ending deforestation, integrating kind of regenerative practices on the farms where we're sourcing from, restoring and conserving nature within those supply chain landscapes, as I just mentioned. Because one of the things that we did learn now, having worked on deforestation for the past 10 years, is that we can work as much as we want to on one specific supplier. The supplier may be next to them, it might still be deforesting. And so we actually kind of need to take a step back and think about how do we address this at a more holistic level and ensure that we can really move the needle for the action that we need at the scale that we need it kind of right now, with urgency as well.
Can I come to you, Jeff? Is there, how does Shell put nature at the forefront? How can you shift the needle here? Because actually, for example, say people say, well, we want to, we either phase out fossil fuels or we stop them overnight. Actually, we can wait for policy companies can actually make a decision. They can make big and bold and brave decisions, and there's many examples of that. What would it take for Shell, and what's your view on this, Jeff?
Yeah, well, Shell is already shifting significant investments from fossil fuels into the low carbon and new energy sources, which I mentioned previously. And then in all of the efforts it's undertaking, NBS and beyond, there's, Shell has a balanced scorecard, and in everything it's looking at balancing community needs of employees and individual stakeholders, as well as the environment, along with the company's operations as a business. And all four of those things need to work in combination to continue giving Shell the resources and capability to pursue all these endeavors.
Stephen, would you like to share anything? Any reflections on that?
Yeah, I mean, I think this is, it's important to reflect on 2020 being this milestone year for many companies that we were tracking over the course of the last 8 years through supply chains that had 2020 goals of being zero deforestation and through commodity supply chains. And now we're dealing with a similar type of commitments that are 20, 30 years in the future around net zero. And as these are really complicated, goals to implement, we need to make sure we're tracking the progress and we're able to see where the wins are. I think where we're seeing kind of the need for us to really not push away project-based approaches for carbon credits is because there needs to be short-term solutions. And as we are also able to value biodiversity, with clearer metrics, value the fact that indigenous people who are the best managers and stewards of land are only getting 1% of the climate finance that's needed for them to protect 80% of the world's biodiversity, and they manage 50% of the world's forest. So, these are fundamental, problems that need to be shifted. This is like a market failure in a way that we've had 20 or 30 years of carbon markets, but still, these indigenous people and traditional communities have only received that much of climate finance. That is a big outcome from COP. The trillion was 1.7 trillion or so committed to indigenous peoples and local communities. That will help, push this forward and move this away from it being solely about what the corporates can do to benefit from these different approaches to now how indigenous people and on the ground actors can really be the safeguard actors, to support, nature positive approaches.
So that's there's some questions coming in through the chat, and there is a question there. Could the corporate speakers give some examples of how they have invested in market building or market infrastructure to improve the carbon offset market functioning overall? So perhaps we can move to this, the arguably dissonance of the necessary evil of offsetting, the requirement to offset, and at the same time how we make that a good functioning market. So would one of the panelists like to respond? Who would like to go first? Jeff, perhaps you can share. Oh, Michelle, you've unmuted. Let's go with Michelle, and then I'll come to you, Jeff, for your view on how we can improve the market infrastructure of carbon offsets overall. Michelle.
Yeah, I would, maybe Jeff can go first from the offsetting perspective. I kind of want to bring it back to the insetting aspect of this question, if that's okay.
Sure. The projects that we're working on, specific carbon projects, many of them are implemented with local partners, local NGOs, and the very point of a lot of these first of projects are to build local capacity and build the infrastructure on the ground to deliver these projects and deliver them not just for the carbon benefits, which are of secondary interest and import most of the time to the local communities and partners, but to deliver all of the community, social, and kind of other environmental co-benefits that go with it. So that concept of benefit sharing is really baked into the review process that looks at all of the projects that we get authorized to take on. And then just looking more broadly, Shell's also investing a lot in just kind of basic technologies and techniques to improve the implementability and reliability of these projects. And so that comes down to monitoring technologies, looking at new flux towers, modeling, remote sensing, ways of ensuring that these projects and programs are delivering the climate benefits that they are intended to, and having the ability to maintain that and confirm that on a long-term basis.
And to what extent then, when you say that they achieve their goals, how that then balances with other parts of the business in terms of where there is environmental damage, how that's balanced? Is there an overarching framework there for the balance of offsets versus for example, the investment in clean technology?
The approach again is a yes and approach, and make sure nature-based solutions, all of these new energy technologies are all contributing to Shell's move towards and transition to being a net zero energy provider.
Okay, Michelle, perhaps we can hear from you, and then I have a question for you, Mike, that's coming in on the chat too. So I'll, Michelle.
Yeah, sure. So I'm, again, from the ag and food perspective, taking this question more on the insetting, from the insetting angle. So maybe again to kind of clarify, because I think sometimes we talk about these things from different angles. For us, we invest in insetting to be able to really mitigate kind of the impact of our ingredients, and then also build these resilient and equitable production systems. Which is really ultimately allowing us to transform our business, but also the sourcing regions and the sector overall, versus the more compensation approach focused on kind of less of business transformation, at least for us from our sector perspective. But both of those elements are really critical. I think we're in the context of insetting, how we're building out kind of these critical elements of infrastructure capabilities is to work with the suppliers and the farmers to actually enable them to have those skills and to design the projects exactly aligned with also the carbon principles that are needed to ensure that credibility is there, and what Mike was mentioning before, kind of the permanence of those projects. So we're working with the suppliers and those communities over the coming 20, 30, 40 years on ensuring that whatever we're kind of setting up will last for that amount of time. So there's a lot of opportunity in that, but also the complexity of ensuring that we can set those up so that it's actually sustainable in the long term and not just a kind of a short-term punctual intervention.
So thank you, Michelle. And on that note, Mike, perhaps we can move to the question that's brought to you around the question is that you mentioned a move away from CSR initiatives. Does this mean as partners expect IRR on their investments, or is it funded through CSR funds? And I'd love you to share, in reflection of the conversation we've had so far, what you would be saying to investors, the kind of questions they should be asking. What would investors be asking of Jeff, of Michelle, of others?
Yes, so I can maybe there is also another question, which is how do we source the portfolio of projects? And I think it's easy to answer the two of them actually together, because they will give you a bit more of an understanding. Super. So what I should say is we don't invest at this moment into projects. These are third-party projects. These are community managed forests. These are ecosystem restoration concessions, which are run by local communities, or they are run by local NGOs or NGOs in general. We are looking to broaden that out, because we really want to think about, what could we do in terms of forested assets right now, turning them from exploitation concessions into conservation concessions and things like that, what to do with retired logging concessions, for example. So that broadest kind of scope of what the projects would actually look like varies. Obviously, the conservation, restoration also varies. The focus of them also varies. There are differences in terms of the livelihood components of those projects as well. Obviously, community managed forests have a huge livelihood component to them. The way I think maybe the problem is maybe in the language that we're using in terms of investment, right? We don't technically, in the traditional sense of the word, invest into the projects. What we do is we treat them like they should have been treated since they started, right? Which is that they produce a good, they produce a valuable commodity, right? Which is only now being recognized effectively. But they have always been producing through conservation. They have been producing ecosystem services that have just never been valued. And what we're doing is we're effectively creating an access for them to the market, which is these large corporates that need them for their corporate sustainability commitment goals. And so there is no return on investment. The return on investment is the claims that the corporate participants are able to make on the outcomes that the projects are receiving. The actual environmental service outcomes, if you think of that as a unit, are retired in the name of the corporate that is actually contributing to the project. So the corporate can make a claim on that outcome. It cannot be double counted. It is effectively a tangible thing, but they don't get a monetary return on investment in the traditional sense of the word. And maybe if I just one quick thing on how do we integrate it away from into the business rather than CSR. Ever since I started working in sustainability, people have always been talking about, we need to add $1, $5, $10 onto a ton of palm oil, and that needs to go into conservation. Really, for the first time that I've seen it working within this industry, what we're doing is we're linking the scale of the contributions to the scale of the sourcing of the palm oil tonnage and the products of palm oil. So if you source a lot of palm oil, you will have to contribute more. Your claims will also be higher, though, but there is a baseline, there is a minimum baseline. The system love to work on doing R&D on this, and we will be improving that, and really would love to have more partners to help us think how best to do that and improve it.
And it leads to also an interesting discussion, Mike, which is around where if all companies were to account for number one, nature, and number two, profit, that actually nature features on the balance sheet and is an asset in and of itself. I'd be very curious to have that discussion with you all. Before we and also Stephen, I'd like to come back to you. But before we do, there is a question in the chat, Jeff, which is perhaps a more refined articulation of my initial question. The question is, Shell is shifting towards more sustainable energy sources. How much of Shell's capex is on new fossil sources, and how much on renewables? And what is the approximate pro rata share of each?
Yeah, I don't actually know that breakdown. Again, I work on the nature-based solution side within the renewable and energy solution side of the business. I know within our business, there's 2 to 3 billion being invested annually in renewables. Of that, currently the nature-based solutions piece is 100 million per year, and that number obviously is going to go up dramatically if we're going to hit this target of 120 million tons per annum by 2030. So these investments are significant, and this piece of the business is growing, and investment is increasing, while oil production has already peaked kind of 3 years ago and is declining on an ongoing basis.
So would it not be fair to say that you started with saying you're not sure? Wouldn't it be an amazing thing if every single Shell employee was able to answer that question in the first instance based on how much is being invested in because it sounds like there's different parts of the business. I mean, I recognize it's an enormous and very complex business. The future direction and long-term trend of Shell is that actually that's a completely central answer, rather than there being nature-based here and other components there. So rather than the fragmented answer, that it's actually all of one on of its own. Stephen, unless Jeff, I'll give you a moment to come back on that, and then we'll move to Stephen.
Yeah, well, I can't speak for other employees. I just don't know that. I don't know that percentage offhand, but I will say that the company's entire business strategy has got meeting this net zero target and goal is a cornerstone and is baked into all of the decision making the company's undertaking and directions it's setting looking forward.
Stephen, I recognize, sorry, I thought we had 60 minutes. I was wrong. We have 45. So we do need to round off as we've been prompted by Warren. Stephen.
Yeah, I'll just to be very, very quick here and close this out because I know we do have to break. But I think this is the time, for private sector ambition and public sector policy to really come together. COP26, to some may seem as though it didn't produce enough, but at the same time, we're seeing more money than ever be put on the table for nature than any other COP, any other biodiversity COP, any COP altogether. So I think that's where we need to really focus in, is making sure that the financial commitments made by private and public sectors actually take place, and that it's not just the corporates on the claim side that get to achieve the goals around climate neutrality or climate net zero, but it's also the benefits that get shared throughout the supply chain, from the entire process all the way back down to the communities. So I'll just leave it there.
Great, thank you very much to all of you. We raced through the 45 minutes in the end. Thank you, and back to Warren.
Just want to say thank you, guys. Yeah, amazing session, and you're welcome to join us any time in the future. Thank you.
Thank you very much, everybody.
Thank you.